Okay, and we are live. Good morning, good afternoon, good day. It just depends on where you are in the world and when you are watching or listening to this broadcast. I want to welcome you to Lyonsview Realty Financial Fridays. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. Our team provides residential, commercial for small businesses and nonprofits, and property management services. So we launched Lionsview Academy last year, and we provide real estate licensing and continuing education courses. Also, we do credit counseling and distressed homeownership solutions. So if you have a problem that you're going through related to your property, give us a call and we'll help you out about that. And as always, lifestyle, health, wealth, and wellness education. So if you check out my Instagram channel, you'll see my meat-free journey that I've been going through. It's been pretty cool. But Lyonsview Realty Financial Fridays, we launched it to really help you stay current on those trends that impact your bottom line. Our goal is to provide you with resources, information, and tips to assist you in making the best financial decisions. And our commitment is to maximize your wealth building power now and in the future. So I'm glad that you tuned in today. Welcome, welcome, welcome. Feel free to like and share this broadcast. Remember, our guests are always here as a resource to you. And if you have any questions, you can put them down in the chat. And our guest today is a phenomenal, phenomenal young lady. She is, I've known her for a while, and we met through the National Association of Real Estate Brokers. She is a mortgage specialist, and she's going to have some really, really great information for us today. My hat's all crazy. She's going to have some really, really great information for us today. So I'm going to bring her on, Miss Nicole Archibald. Welcome, Nicole.
Hello, good morning. Thank you for having me. I love that you're so chipper every single morning. It makes me so happy.
Indeed, indeed. So, another day that we are above ground and we are breathing is an opportunity to smile and to be happy, because there's a lot going on out there in those streets. And, it's been, I think well, not the last time you were on, but one of the first times that you were here, COVID was in full effect. And now,
Mhm.
we were talking about Rona. And now
That's what I call it.
yeah, now we have what Omicron is going on, and
Mhm.
Omicron is no joke.
Yeah,
It's,
it seems to be pretty scary. I feel like it's just running rampant right now. There's a lot of people that have been contaminated, if you will. And I know at least 6 people that had it. So, I mean, thank God it wasn't something super severe or major, but it's just an inconvenience. And at this point, I feel like we're just going to have to live with it. It's just like going to be the flu. It's going to be the new flu. Um, I'm just happy that it's at a point now where people are not, the death rate is lower. So that
yeah,
makes me feel better. But you
yeah,
still have to be careful. Like I still have an elderly parent. So
yeah,
just take precautions. I'm still sanitizing. I'm still wearing my mask. I'm bringing my little wipes and wiping down anything if I go somewhere. So I just feel like it's a little better that we're not as afraid to leave the house, but we
yeah,
can go out and do a few things, but it's just still tough.
yeah. Indeed, indeed. I think that's really, really good advice. And people have relaxed, but I don't think
Mhm.
it relaxed too much because, as you said, there's still precautions that need to be taken, and there are still people who are dying. It does seem like it's coming a little bit closer to home. Like I know people now in my immediate sphere and in my
Yeah.
immediate family who are being affected, and I do
Right.
have people around me who have compromising conditions. So I want to make sure that everyone continues to stay safe for sure, for sure.
Hmm.
So, but today we're going to be talking about. This is our, like, I call this our Show Me the Money series. you know, people
I'm the
are
money
all,
person, I suppose.
yes, people are always looking at how do I, get the money that I need in order to be able to purchase a house. And so, if a person is looking to purchase a home, what are some of the things that you would say they need to do to be prepared for the loan process?
The loan process is an emotional roller coaster. I mean, that's the best way I can describe it. I've said this so many times to so many buyers, and sometimes at the end of the process, they're like, you were not kidding. Because, from one day to the next or 1 minute to the next, it could be one thing and then something completely different. But you have to wait until the end all be all is said. So when it comes to the lending process, there is a little bit to be nervous about. I understand where buyers come from with that.
Hmm.
But you just have to trust the process. And I know a lot of people don't like to hear that, but that's the best advice I can give is just trust the process, trust your professionals, trust those people that are helping guide you through it because it is scary and you need to rely on the professional and the experience that your person is, has under their belt. So, um, just trust that they're going to take your best interest and put it first. But for the most part, there's not really much that you should be concerned about. I mean, if you have all your ducks in a row, you just want to, obviously save your money, have decent credit. There's a number of factors that play into the lending process, but if not all lenders work the same. So if there's one lender that doesn't work, it's nothing to be discouraged about. Just keep going out there and finding, almost like finding your mate. You got to keep looking, you got to keep dating and looking for that right one that fits you. And then once you find that match, then you're, set to move forward. And then you can start actually looking for a house. So to be prepared, just to me, the emotional piece is the biggest part that I come across that's an issue
Yeah.
or a concern. So just it's the butterflies, it's the anxiety, but just trust your person.
Yeah.
Find somebody
And
that you
about
trust.
that's really, really good advice. It is like a relationship for sure. And, it is very, very emotional because this is probably one of the biggest purchases most people will make in their lifetime. So they want
Yeah.
to make sure they're ready. What percentage of the loan amount would you say they would need to purchase a house? Just kind of a ballpark figure.
So it really depends on the loan product that you're working with. So some of them take no money down, so such as VA and USDA loans. Some of them have 100% financing. But in general, most people are going to need anywhere from 3 to 5%, bare minimum. It really just depends on your credit score and your profile, and like I said, a few other factors that work into that. But for the most part, at least 3% to put down. And then on top of that, you want to have funds for your closing costs.
Awesome. Awesome. And when you're looking at, because you get a lot of buyers who come through, where are some of the places or the sources that people get their money for their closing costs? So I know people can
So
save it.
yeah, that's a good question because a lot of people ask that. So you can get your money from yourself, obviously saving your money. But you can't take, there's certain forms of income or funds that we can't use. But I'll go over the ones that we can use. So we can use a gift fund. It has to be from a relative. So let's say your mother-in-law or your parents. Let's hope you have a great relationship with your mother-in-law. Wants to give you guys money to put down on your home purchase. You can take funds from your sister, a step parent, a half sibling, something of that nature. You can get as much gift money as you want. So as long as it's your primary residence, if it's like an investment property, the gift funds, the guidelines change. Um, but for the most part, on a primary residence, yes, you can take a gift from your family members and it could be any amount. And you can take as many gifts as you want. So if 10 people want to give you a gift of $100 each, then that will work. You just need to fill out a little more paperwork, but you can definitely get it done. Then there's also sources like the down payment programs that we're probably going to cover most of that today. And there's a ton of them that are out there. A lot of them are different, and it just depends on where you live. It depends on what type of program you're working with. Because some of them, apply to certain areas. Some are statewide, some are grants, some are loans. So it just depends on what type of program that you're going to apply for. But for the most part, you can take a gift, saving your own funds, or using government or state
Gotcha.
funded down payment programs.
Gotcha. And some people are getting it from they're borrowing from their retirement accounts. Is that?
Oh, yes, yes.
Mhm.
Yeah, so you can definitely use the funds from like a pension or retirement. Usually, in most cases, you can do a withdrawal for a home purchase, and there usually isn't any penalties for it. That part I'm not too familiar with because I'm not a tax person, but I do know you can either take a loan or do a withdrawal based off of your retirement plan. We do require that you have to provide all of the stipulations for it. So we need to see all of the guidelines for any withdrawals on any program that you're reaching out to or going to participate in. So yes,
Okay.
return be painful with a lot of the paperwork that you might have to turn in, and some of the state requirements require physical wet signatures, meaning you have to sign with an ink and pen. A lot of times we can't take electronic signatures for some of these things, so it's something to note. Because a lot of people get tripped up. Like nowadays, you wouldn't think that, but not everybody has access to a printer or a fax machine or whatever, anything to even print or get this stuff back. So the other benefit is that you can walk into any Wells Fargo bank and drop off any documents that you have and play with us, and any banker will send them over to your loan officer. So that's actually pretty cool, and everything is encrypted and it's all secure. So that's another benefit that you can have working with a bigger bank, because obviously there's a lot of locations. So you can use our facilities. But basically, with this Njh Mfa program, it's pretty self-explanatory. You have to have a 45% back-end ratio. It's, like I said, statewide. It's only for active police officers, not state troopers. And you have to be employed for at least 12 months. So you need to have at least 12 months of deposits into your PFRS system to qualify. You have to be full-time. I'm trying to think of what else I'm missing.
That's actually good. That's a good start. So
yeah. So, and then the debt to income, like I said, is 45%, which is pretty standard for most conventional loans. On a purchase, sometimes you can go above that. I just wanted to make note of that too. But whenever you have these types of programs, you have to adhere to the most conservative part of the guideline. So that's another note to make.
Right. Okay. Cool. Thank you.
Oh, no problem. So the next one we're going to go over is the Njh Mfa program itself. So this one's eligible to any buyer, as you're aware. So this is where people, like I was saying, were getting tripped up because Wells Fargo wasn't participating in this until recently. So this is actually really fun for us. This is eligible for FHA loan types, FHA, USDA, and VA loans. You do have to be a first-time home buyer for this program. Some of the other programs, you don't have to be a first-time home buyer. So I just wanted to make note of that too when you're out there shopping. People don't know that there are programs available for you, even if you already are a current homeowner, which is pretty cool. So this one's just strictly for first-time home buyers. Obviously, it's different per county. It's eligible for any area for the most part. Your back-end ratio for your debt to income can't be over 47%. And as it says, you have to follow first lien guidelines. So that basically means you can't have any second liens on the property. This is a forgivable loan. So once you have it, you have to stay in the home within a certain time, which is 5 years. And then after that time, then the loan is forgiven. So you don't have to pay any of that money back, and it's up to $10,000. So that's a lot of money.
That is a lot of money. Yeah.
Yeah.
So on this particular one, they have 5 years to be in the property, and after 5 years, that's forgiven. Is there like an income cap for people to participate in this program?
No, there usually isn't an income cap for something like this, but it's just you just have to have the credit requirement. Excuse me, I'm getting tongue tied. The credit requirement and the proper location for it. So as long as those things fall into play, then you're good. You don't have to have a certain amount of money to put down, which some other programs do require, that you have to have a certain percentage of the loan amount to put down in your own funds. So that's also another benefit to this program as well.
Right. And then first-time home buyer, that's anyone who hasn't owned a property within the last 3 years. Is that guideline still the same?
Yep, that's correct.
Okay. That's like being on title.
Correct. Yeah. So even if you don't physically own a home, but you're listed on title jointly with someone else and you don't live in that home, you're still considered a homeowner because it is an asset that belongs to you. So if something happens to that home, you're going to be responsible for it. So if you're on title or anything like that, you are not considered a first-time home buyer. Once you are not on title for 3 years, as we said, then you're eligible for a first-time homebuyer program all across the board.
Gotcha. Gotcha. And so the interest rate on this particular program, is it the same, different?
It would be the same. You're just qualifying for a regular standard loan program for FHA, USDA, or VA. So
Hmm.
whatever those rates call for, that's what you'd be eligible for. They are still competitive based on the program. So obviously, if you're eligible for this program, then your rate category is going to be a little bit different than someone who doesn't require down payment assistance.
So
Um,
it's considered an FHA loan, or is it? I
mhm.
mean, okay.
Yeah, a lot of people go with FHA because FHA is well known as the first time homebuyer program.
Mhm.
Even though some conventional programs are very competitive with it, as we discussed before
Uh-huh.
in the past, I'm sure. But yes, it's mostly with an FHA loan type. Yes,
Okay. Can you do conventional with these funds, these particular
not
funds?
with this one. No.
Okay.
Oops,
And you
sorry. I think
mentioned USDA. So USDA is a different product as well. So you can use this product with the USDA product with this particular down payment assistance program as well.
correct.
Okay.
Mhm.
That's
One thing I want to write down. Second, sorry. Now that you mentioned that USDA, so USDA does have household income restrictions.
okay.
That's one thing I did want to mention. I'm not sure if you're familiar with it, but with USDA, it's household income as a total, not just the person applying for the loan. So
Gotcha.
if you have other people that live in the house with you or that are going to live in the house with you, they will take a look at all of those bank statements, all of that income that's being generated, because it's for low to moderate income buyers. So if you're over a certain amount, then you won't qualify for the USDA program.
Gotcha. Gotcha. And is there a specific time frame, like how long does it take for it to process this type of loan?
That's a good question. I would say at least 45 to 60 days, depending on the time of year, depending on the workload of the lender. It really just depends. I mean, some of them go through fairly quickly. So, I mean, obviously, you have to disclose this when you're sending in an offer to your seller. Some
Mhm.
sellers care, some of them don't. So, you do need to be cognizant of that. Depending on, I guess, the timeline of the seller is really what could make or break your use of this program.
Okay.
But like I said, I feel like if you're purchasing a home, the right home will come at the right time. So I don't
Mhm.
want that to be a discouraging factor, but just it's a marathon, not a race. So especially with the lending process, and a lot of people want to get things done fairly quickly, which I understand. But when it comes to your finances and you're getting free money, you need to take your time.
Right. Right. Are there any other guidelines for the buyer? So they have to be a first-time home buyer. The income range fluctuates, I guess, depending on geographic location of the property.
Mhm.
Anything else that the buyer has to adhere to in order to do this program?
Oh, yes. One other thing I wanted to point out is the credit score. So your
Mhm.
credit score needs to be a 620 for this program. However, like I said, whenever there's, certain lenders have their own guidelines and requirements, they have to go with the more conservative one. With this one, Wells Fargo requires a 640. That's
Okay,
what we require for FHA. So that's what's going to be the requirement just to qualify, period.
gotcha.
So that's another thing to note. So if you have a different lender that's working and they'll go down to 620 for this type of program,
Hmm.
then just make sure you have that clarified before you start applying. Because sometimes, people may or may not know what their credit score is, but if you know that going into it, you're prepared.
Right, right. And that's not bad because some lenders right now are doing 680 minimum. So 640 is actually pretty, pretty
Very
good.
good.
Yeah, yeah, pretty good. And, Nicole is a phenomenal mortgage specialist. She is a great, great communicator. She, keeps you informed throughout the process. She stays on top of everything. So
I
she's
try. It's a lot.
she's a great person. I enjoy working with her on transactions for that reason. And I'm really, really excited that Wells Fargo now has this $10,000 down payment assistance up to, I'm going to preface that, up to
Yeah.
$10,000. Do you have an idea of what are the things that impact if you get the full amount or a lesser amount?
No, I feel like in most cases, we always have to say up to for technicality, but you're probably going to get the full $10,000. I mean, I haven't had anybody that applied for it and just got like $4,000. You know what I mean? So
Mhm.
there are other programs that specifically say up to. So I just say up to at a habit, But when it's the Njh Mfa program, let me go back to that slide.
I'll put it back up for you.
Yeah, I don't know if it was still up or not, but I had hit the button by accident.
It's up now. Mm-hmm.
Yeah, but this one will go towards your down payment and closing costs, if you can see there at the bottom. So it is $10,000. There are other ones. I'm going to go to the next slide. If you can see, like this one for Mercer County, it says up to $10,000, and then Mercer County is up to $7,000. So they're all different. But with this one, it's a statewide grant. And also another thing to make note is that these are first come, first served basis. So when the funds are out, they're done for the year.
Gotcha.
So a lot of people try to apply for these types of things at the beginning of the year. At least if you qualify and you are in the process and you know you have some time to work with, because by the end of the year towards like, I don't know, the holidays, like Thanksgiving, some programs, they just are out of funds and you just have to wait until the new year comes.
Yeah.
So that's also another thing to make note of.
Yeah. And then the first time status, it's on title anywhere in the United States, not just in New Jersey.
Correct.
Okay, great. Okay, this was good. Anything else about this particular program?
It has to be primary residence. That's the only other thing I wanted to make note of. A lot of, because you can't, like I said, use down payment assistance on like secondary properties, investment properties, even though that would be my dream. But no, it has to definitely be your primary residence. So that was the other thing to make note of.
Gotcha. This is a great opportunity, and I think people forget or they become impatient. So if you go through your qualification process up front, spend the time to fill out all of the paperwork, because it is additional paperwork for this particular program, and get what you need up front. Then when you go out looking, you're ready. And sometimes people wait until they find the property. And then, do you find that there are people who get declined for the property for the grant for whatever reason?
You mean like their offer not accepted because they have down payment assistance?
No. They go to apply for the down payment assistance and, it doesn't go through because they don't qualify for it for whatever reason.
Yeah, I mean, it definitely happens for whatever reason. I mean, there's some instances where people just don't qualify. I mean, if your credit score is not there, your debt to income is really like a deciding factor. A lot of people don't realize that. And a lot of times people get mad at the lender for that. And I understand it's very frustrating, but your debt to income is probably just as important as your credit score. And a lot of people don't realize that. That is a major factor in helping to pick your interest rate in most cases too. Depending on the lender. Some credit unions, if your credit score falls within a certain bracket, this is the interest rate you get. And then if you're in this tier, that's the interest rate you get. But not all lenders operate that way. So your debt to income could definitely be, even if it's like this one says 47%, if it's 47.01, you don't qualify. Right. So that is a huge factor and something to consider. So another thing I should backtrack on and say when you are shopping for a house is make sure that your debts are paid down as much as you can, because that can definitely make or break your purchase amount too.
Yeah. And then there's student loans, but we're not going to get into all of that in this broadcast. But there are a lot of things that impact, your ability to purchase. The other thing that I'm finding is coming up is the season funds. Even though people are getting down payment assistance, they still need to have a certain amount of money in the bank to show. So you can't have no money in the bank, and you can't put it in at the last minute either.
Correct.
So that's one of the other things to look out for. Even if you're getting, most of your down payment paid for, whether it's through this program or the seller is helping out with some assistance in the cost, any of those things. So,
right.
Anything else?
The thing is, because of FHA has requirements that you need to have a certain amount of reserves sometimes, depending on your credit profile. So that's a good call out there.
Yeah, reserves is basically money in the bank.
Yes.
Sitting in the bank
how much money you'll have in the bank after you close?
Right.
Because you don't want to go to closing and not have any money for your first mortgage payment, which is logical, right? Like you want to have at least one mortgage payment in your bank account.
Exactly. And people are like, I'm getting my income tax check, and that's it. Once they, spend that for their closing costs, they're out of money again. So that's a really valid point. So tell people where they can connect with you, how they can find you, connect. they want
You
to?
can find me at, no, let me stop. You can surely email or give me a call. I'm always available for the most part. If I'm free, I will pick up the phone. My phone number is, do you want me to give my number or are we going to put this in a chat somewhere?
You can put it in the chat.
Okay, so let me
And
see.
if you want to.
Okay, let's see.
Was there another slide you wanted to show?
I mean, I just had a couple. I can review them. The one I did want to point out was for Mercer County.
Okay. Whenever you have it there, I'll put it up on the screen. And what's the number to put into the chat?
I'm typing it up right now.
Okay.
No, wait, this is private. It shows.
Okay. Let's remove that.
Like, I don't know where that went.
That went to me. It's private chat. So if you can tell it to me, I'll put it up.
Oh, gotcha. Okay, so my phone number, I can be reached. You can text or call 609
Okay.
203 3020.
3020. Okay.
Very simple.
All right. Great. So I've got your information in chat. And I just want to thank you. Did you find the other two
Oh, yeah.
that you wanted to talk about? The other
Here it is. Okay, so the only other one I wanted to mention was the the Mercer County Down Payment Assistance Program. This one is up to $7,000.
Okay.
And it's very similar to the Njh Mfa program. Like I said, there's a couple different down payment programs. I feel like the Njh Mfa $10,000 state grant is like the most, is the biggest one. But a lot of people don't know that there are some county grants, Mercer County, Atlantic County. They have a couple of them. So this one can help with up to $6,000. This one's area restricted. It's only for first-time home buyers. This one does have a certain purchase price range that you need to be in. So you can't be over a certain amount, if that makes sense.
Yes.
Yeah, like over the median purchase amount. That's what it's called. And then let's see. Oh, your household income. This one does have an income restriction. Can't exceed over 80% of the average household income for your area.
Okay.
So that's another big thing to note too. And then it's the same thing. You just follow your standard conventional or FHA guidelines. It can be paired with a couple of different loan programs as well, loan types rather. But this one is right next door. It's, we're Burlington County, Camden County, Gloucester, and Mercer County is right next door. So I figured that would be something to make note of. I know that we may not have time to cover it today, but at least put that out there so that you have that information. You can kind of maybe inquire about that with your lender.
And look at other areas because price points are different in different areas. And it's been a really robust market for the last year and a half. Really, it's been extremely robust.
It's been very aggressive. We'll say that.
Yeah, so you may need to go a little bit farther than you might have anticipated. So it's good.
Yeah, and this can make or break it because I have a couple customers that are in between Mercer and Burlington County, and I'm like, hey, you got to kind of pick a line, pick a side because this can make a big difference.
Indeed, and having an additional $6,000 to $10,000, $7,000 is major.
Yeah, it's a pretty big deal. I mean, I wish I could have taken advantage of that. I think I'm gonna try to next time I buy another house. I'm gonna start trolling for down payment programs.
Yes, and it's worth it to get the money. A lot of times people they're like, oh no, I just want to do it. No, if you can get it, why not have it? Put that money into something else for sure.
Yeah. And this, when you first buy a house, because I went through my first experience over the summer. So when you get a house, it's definitely overwhelming. But at the same time, it's like you're going to have problems. It doesn't matter how new or old your house is. So if you can get some money from somewhere else, you're just, whenever you buy a house, you're just broke. You're just broke for a little bit until you get things up and running, especially if you're doing it by yourself, like if it's just you, it's definitely tough. So if you can take advantage of any type of assistance or funding, just go for it because at the end of the day, it's not going to do anything but benefit you. And if you don't qualify, then it doesn't hurt you any. At least you tried.
Indeed. That's so true. So true. Very words to the wise. Nicole,
Yeah,
thank you. I appreciate
you're
you.
very welcome. Thank you for
Yeah.
having me. I always appreciate it. It's always lovely to see your chipper, winning personality in the morning.
I appreciate you coming on. And, I want to remind our viewers that our guests are here for, as a resource. So reach out to Nicole. And whether you're watching live today or you're watching the replay later, remember to like, share, subscribe, and, share this with others because a lot of times people don't know. So when you know better, you can do better. If
Mhm.
you have any questions, reach out to Nicole directly, or you can reach out to us at Lyonsview Realty if you're interested in a career in real estate or you need information or assistance with your next real estate transaction. Or if you just have a real estate situation and you want some advice, more than happy to talk with you. So you can just drop a message in our social media or call 856 Oh my God, I didn't have my banner going on today. Uh,
It's okay.
yeah, that's so funny. Going across the bottom. Oops, that's the one I
You're so
want.
fancy, Clara. I don't know how you do it. You wear all these hats and you still learn technology. I mean, good.
oh
I
my
want to be like you when I grow up.
oh my goodness. I'm still learning and growing and doing you know doing oh here is the one I wanted. There we go. Doing my thing. So but you can
I
reach
love
out
it.
to us at the information that's at the bottom on the ticker. So I want to just thank everybody again for watching today or to listening to the broadcast if you're listening later on. Again, Financial Fridays is here to provide you with the resources, the information, and the tips to assist you with your bottom line. So I hope that you received something of value today. My name is Clara Lyons-DeVaughn. Financial Fridays. We stream live every Friday, 9:30 a.m. Eastern Standard Time. Look for my bright and smiley face in the place our guests. So you can join us again next Friday at 9:30 a.m. Tell your friends. Until then, keep living your best life. Thank you so much, Nicole. Have a
Thank
great,
you.
great, great day.
You too. You too. Be safe, everybody.